Hi everyone, thank you so very much for joining us for this Charles Stein Direct webinar on International Women's Day. My name is Erica White and I'll be the host for your session today. I'll be sharing the floor with my fabulous and very knowledgeable colleagues about Lisa Caplan, our Director of One-Step Financial Planning. Lisa's a chartered financial planner with over 14 years experience helping people understand their financial position and to make good financial decisions. Alongside her is Rebecca Stein, our finance pro. Rebecca is the head of our tailored discretionary service. She's worked in the financial services industry since 2011. And prior to joining the tailored service, she was an investment manager here at Charles Stanley. Hi ladies, thank you both so much for being here.
Hi.
Hi, Erica.
All right, listen. It is no secret that women are underrepresented when it comes to finances, not only as investors and pension savers, but also professionally too. So we found it to be fitting that today on International Women's Day, we, the professional minority, speak directly to you, the investing minority, all about female-specific considerations to be keeping in mind when it comes to your finances. Because I don't know about you, but I can't really think about a better way to be spending this very special day than to be arming our fellow ladies with the educational tools and the resources needed to feel good about your financial decisions. We'll be going through this in chronological order by approximate decade. So if you're on the younger end of the spectrum and feel like you've gotten everything you need to know in the first half of this session, please do feel free to drop off. And ladies that are in the more seasoned end of the spectrum, please do just hang tight as we get through the career starting, marriage, maternity leave bits, and get to the more age relevant content as the hour does tick on.
So Lisa, let's start with you. Just set the scene here for me today. Why are we focusing specifically on women?
The theme for International Women's Day is Inspire Inclusion, and they're looking to forward economic empowerment for women.
I love that.
There are two ways in which women are not as included as they should be in the finance world. I mean, one is professionally. It's quite a masculine industry, the finance industry. Rebecca, I think you.
I think we all know that pretty well.
I mean, just to be in this room with women is lovely.
Yeah.
And I often feel different to most of the people there. But today, really, I want to talk about the other aspect of it, which is women as savers and investors, because women are definitely underrepresented as investors. I think the figures are 60-40. I mean, there are different studies and different reports, but that's how it breaks down. That of the investing people, 60% are men and 40% are women, and clearly that's not how the population breaks down. And I mean, there are reasons for that, of course. I mean, women earn less over their careers because their careers are often interrupted through having children or other things. And they have less in their pensions, and there are a whole lot of, I mean, there are reasons behind that, which kind of means women get underrepresented. I mean, those are sort of the macro things, but they're also sort of the softer things as well. When you look at women who have invested, they invest quite well.
I've read studies that say that as well.
They make a plan and stick to it, so there's less chopping and changing.
They're less impulsive, they're more responsible, dare I say.
I would say they're slower to trust, but when they do, they do.
Right.
And that's good. From an investing point of view, that's certainly good. And also, they tend to be a little bit more conservative in terms of investment strategy as well. But when I talk to women, I find they feel the industry isn't talking to them, they don't understand, and the industry isn't talking their language, and they don't feel understood, or they feel ignorant, and they shouldn't, and they feel ashamed of their ignorance, and they shouldn't. And kind of that's what motivates me to talk today.
I love that, and I think that's such an important point. I think that we've talked time and time again here that knowledge truly is power, and so the more that people understand their finances and aren't scared of their finances or ashamed around their finances, is something I know that I've been very guilty of in years past, that you can then feel empowered to make these decisions with confidence, and that's kind of the whole point here.
Yes, I want women to feel confident to invest so they end up with more money at the end of the day, because that will give them more control over their own lives and a better life as well.
Okay, so as mentioned, we're going to be approaching the subjects of today's webinar in general chronological order. And although not everyone's life schedule is the same or happens at the same pace or even has all of these components here, the evolution of our lives comes with varying financial considerations, many of which we hope you'll be learning about today. But before we do that, let's break down the essential beginning building blocks for any age. So before anybody does consider anything like investing, what steps should they be taking here? Lisa, did you want to?
Yeah, I mean, it's everyone should build a good financial foundation. That starts with having a plan to deal with debt. Then it's sort of building a nest egg, an emergency fund of, it varies, say 3 to 6 months, so you can cover your expenses. So if you lose your job or something happens, you're okay for a bit to sort things out. And then there are a couple of other things, making sure your loved ones are okay. I'm talking about insurance. And the other thing is checking you're okay. I'm talking about paying into a pension and that sort of thing.
Okay, so if we're going to do this chronologically, let's start with early adulthood. So what steps can women be taking, Rebecca, when they're just starting out with their careers to ensure they're on the right track?
Yeah, so when starting off in work, you may meet the requirements for auto-enrollment. And it depends on certain circumstances, for example, your age and your salary. What auto-enrollment means is your employer enrolls you in a pension scheme and also contributes to that pension scheme.
Which is basically free money, right?
Yeah, exactly. So it's really important to start saving early, because the earlier you do it, then the longer that you have invested, and that money is then compounding in the background. So the earlier you do it, the much better off you're going to be when you eventually do retire. It's also important to set up regular savings plans. So you can look at your income and your expenditure, and even if it's just a small amount, contributing regularly to, for example, something like an ISA, can be really beneficial. So an ISA stands for Individual Savings Account, and ISAs are very tax efficient. So if you open a cash ISA, you can add up to £20,000 a year, and all of that interest is free of income tax.
We love that.
Yeah, absolutely. Alternatively, if your objectives and your goals in life allow it, and also if your risk tolerance is appropriate, then you may open a stocks and shares ISA. With a stocks and shares ISA, any dividends are tax-free, and also any gains on any profits that you make. So they're a really, really great tax-efficient vehicle to start off that saving journey.
So stocks and shares ISAs, just to clarify here, stocks and shares ISAs are specifically for investing in the stock market or other assets to build wealth over the longer term, right?
That's correct. So that's why you need to make sure that you do have the appropriate risk tolerance, because you are taking risk with your money and you could get back less than what you put in. We've got a lot of resources on the Charles Stanley Direct website. So Erica, you did some great videos. I'd thoroughly recommend watching these videos if you want to try and demystify the investment world, because I think those videos really help to sort of jargon bust a lot of these financial terms.
And they do come from like truly zero finance knowledge, so that they really are kind of the actual building blocks that I used to go from being a totally ignorant person in the finance space to now feeling like I'm kind of medium ignorant, which is better than nothing. So moving along kind of chronologically here, kind of with young adult professional life, oftentimes it does come with having a serious partner, maybe somebody that you are moving in with. What things should people be knowing about cohabiting for maybe the first time?
Yeah, so I think it's really important that you have open and honest discussions about things like expectations, responsibilities, and also your common financial goals. And it's important that that conversation takes place before you move in together. And couples who are living together might consider things like joint bank accounts, for example. Really great way to share those household expenses, but then keeping some finances separate, for those individual goals. And going back to those joint goals and objectives, I think that's great, but it shouldn't be at the expense of your own objectives, especially when it comes to things like saving for retirement and some of that longer term planning stuff.
Anything to add there, Lisa?
Yeah, what's interesting to me is people have such different approaches to money,
Totally.
and you and your partner won't have the same attitude
Yeah.
to money, but you need to understand each other's attitudes to money and accept and work out how you're going to live together.
So with cohabiting kind of going down this timeline here, marriage is sometimes the next step for people. What are kind of some of the common financial pitfalls people fall into with marriage, and what are some things that people should know about it from a financial perspective? I don't know which one of you wants to go first.
From a financial perspective, there are actually a lot of advantages to marriage. But I would never say to people get married for the financial advantages, of course not. But what I mean is there's certain allowances, the personal allowance can sort of be shared under certain circumstances. Investments and can pass between couples without creating a tax, a capital gains tax. And I mean, I know it's hopefully far down the line, but also there's no inheritance tax between spouses. Sort of in that sort of area, people should know that when they get married, their will is usually invalidated. And just throughout life, when things happen, look at your will, reflect, does it, your children are getting older, whatever, does it reflect what it needs to, what you want to happen with your money? Because you can get quite a rude shock in terms of what the rules are if there's no will. And also it's just a kindness to the people who are looking after your estate. It makes things so much easier and clearer and less expensive if you have a will.
Marriage does, of course, create financial ties between couples, and so they can both contribute in the success. But of course, that means that both parties are also then tied to the financial challenges. So that's where we go back to having those open and honest conversations about expectations early on.
Love that. Again, moving on with this natural progression here, children are something that comes into the picture for some women. What financial considerations need to be kept in mind when it does come to kids? I don't know which one of you wants to take that.
Children are expensive.
Yes.
You have to house them, feed them, clothe them.
Keep them alive,
Keep
entertain
alive.
them. Yeah.
Supervise. And a child has two parents, but more often than not, it's the woman who's sorting things out. And it's harder to keep separate finances. There's a joint enterprise and that needs to be funded basically, and you need to work out how, so all the normal stuff about open communication and agreeing. And sort of, it doesn't have to be the women. It should be a joint shared thing.
Yeah.
Specifically, when a woman discovers she's pregnant, she should find out from her employer what their maternity benefits are. For instance, at Charles Stanley, there's parental leave rather than maternity leave, and that means that a man is employed at Charles Stanley can, and they do, take leave when their children are newborn to share that with their partner. So I think that's good. That's really good. And the other thing I would say that I would point out that's important is that you get national insurance credits if you're not working while you're looking for a young child. It's tied to child benefit, but essentially it can really add years to your national insurance entitlement.
I remember you mentioning that previously, Lisa, and something else we did, right? Is you can claim back money for if you look after kids up to the age of 12 or something. Or is it something like that?
You don't claim back the money,
right.
but you need 35 years of contributions to national insurance to get a full state pension. And you can get 12 of those if you're looking after a little child. And that makes a big difference to your entitlement at the end of the day.
Absolutely.
There are some financial products which are specific to children, which may be useful. There's a junior ISA.
Yeah.
So Rebecca was talking about the tax advantages of an ISA. Essentially, this is money that you give to your child over and above the 20,000. I think it's £9,000 this year, and that's also nicely tax wrapped, and they can't get their hands on it until they're 18.
Yeah, so junior ISA, this is an ISA that is specifically for children, so their parents or grandparents or loved ones can be contributing to that. The limit per year for is £9,000, tax free.
Yeah. I mean, the growth is tax free.
Yeah, and the children cannot access these accounts until they turn 18.
They can't get the money out
Yeah.
until they're 18, yeah.
Yeah. Which is probably good.
Yes.
And it can be a great way for grandparents to help save for the grandchildren as well. You know, it doesn't have to just be the parents.
Totally. And also to start with those early conversations about money, which I think is really, really important, to start to create an open dialogue with the little kids that are around about money and why it's important and managing it, etc.
Absolutely.
Moving on now with this life stage graph, start to think about things like retirement. So what steps can people be making in order to prepare themselves for this very important stage of their lives, taking into consideration things like career breaks, etc.?
Yeah, I think you need to do it earlier on is the thing. Because if you're taking a career break, that's a bunch of time where you haven't been contributing to your pension. So when you do go back to work, I would contribute as much as you can. It's got to be affordable, but you've got a hole to fill to bring yourself back to where a man would be if they hadn't had the career break. You know, we talked about auto enrollment earlier as well. You can contribute more than that. You don't just have to do the minimum. And I really think you should consider doing more if you can.
I think that one thing that people maybe forget about is that when you are contributing to things like a pension, that's for future you. So you are the one that is benefiting from that, and sometimes many times over, right?
Yeah, it's still your money.
Yeah.
It's just in a very lovely, beautiful tax wrapper,
That you can't touch until you reach retirement
Well,
age.
it depends on when you're born, but think mid to late 50s. 55 for some people, 57 for other people. And for good or bad, you can't get your money on it. It's doing its thing, it's growing so that it's there for you when you one day stop working. And one day you will want to stop working, of course you will.
So Rebecca, what would an investment portfolio typically look like at this stage of life? And I know that it is different for everyone, of course.
Well, the first and foremost important thing is that your portfolio is well diversified. And this applies to pensions or to any portfolio at any stage of life. So you want to have a good mix of asset classes. So this is where we're talking about equities, bonds, and lots of other things. When you're investing early on, you have a long time to be invested into the market before you potentially need that retirement pot. So we call this your time horizon. And for this reason, because you have a long time horizon, you may have a high allocation to equities. Now, equities are riskier than other asset classes like bonds, but you've got that time horizon where you can withstand that volatility in the stock market. And when we talk about volatility, we're talking about those ups and downs. When you approach retirement, you may start to look to reduce that equity risk within the portfolio. The last thing that you want is to have a portfolio which has too many equities and then you experience a market downturn just at that point that you need to take your money out. So de-risking can be a very valid strategy. Now this is a very fine balance because, of course, if you're retiring at, let's say, 55, then your money may still have to last you, another sort of 20, 30 years.
40 years for a lot of people, I feel like.
Yeah, absolutely. So it's that balance between having some money invested in equities where it's still going to grow, because of course you don't want to outlive your portfolio. Ideally it would outlive you and you've got some to perhaps pass on to the children. So that's why it's really important to take financial advice, and I do think that's a really critical stage, when you're going from accumulation, which is building up your pot, to that critical decumulation, which is where you're taking money out and withdrawing it.
Women live longer than men on average,
Yeah.
And it's ironic that they've got less in their pensions to last them longer. And it used to be that, you took your pension and you gave it to an insurance company and they gave you an income. And now it's much more flexible in terms of what you can do with your pension, which is good. I've seen a study by AJ Bell, which showed that a fifth, so 20% of women said they were going to rely on their partner's pension as their retirement plan.
Wow.
But here's the thing, 76% of women over the age of 65 are single, either they've always been single, they're widowed, or they're divorced. So, you need to make sure that you're okay, make your plans.
Fascinating stuff. Okay, on to the next subject here, divorce. This is something I think that is often overlooked or people don't really want to be talking about, but what financial considerations or things do you think people should be knowing about this topic? Lisa?
Divorces are financially damaging for everybody, men and women, but the truth is they're worse, more financially damaging for women.
Yeah.
Often in divorce settlements, for some reason, consideration isn't given to pensions. And as we've discussed, men's pensions are typically bigger than women's pensions. I mean, and there can be a lot of money in a pension. It ultimately can be more valuable than a house. And it really does need to be taken into consideration. It's important that people check that their needs are met, and financial planning can definitely help with that, because that's what the divorce settlement usually starts with. It doesn't start with 50-50. It starts with, is everybody okay? Can people meet their needs with what's available? If that's done, then it's 50-50. So you need to know, what do you need in terms of looking after children, but also in terms of looking after yourself. I think that's fair enough.
What's your biggest piece of advice to somebody that maybe is starting on a divorce journey?
Seek professional help from a financial planner.
Yeah.
To know, just to have someone to demystify and explain what the husband has, what you have, what the wife has, so that everything is clear and open, and also what that means for you, what the trajectory of your life may be. It can be really reassuring to have a plan, and secondly, it makes you so much stronger in those negotiations as well.
I know, Lisa, you said this before, but when it does come to divorce, it's okay to be selfish, right?
You should be selfish. It's your life we're talking about here, your finances. Don't be nice. Look after yourself, for sure. And it's easy to say, harder to do.
Moving on here, something I think very important to touch on is becoming widowed or having the death of a spouse. Can you talk me through the considerations in the unfortunate event of that kind of death?
Yeah, sure. So losing a spouse, of course, has significant emotional implications, but there can also be significant financial implications. My advice would be that you seek financial advice early, before the death, and that you have a real understanding of what your income and your expenditure would look like upon the death. You may, for example, be entitled to your spouse's pension. It's this type of thing that can be really useful to know in advance, and also to do that cash flow planning so that you're not caught out and you've got enough to deal with upon the death of your loved one. Hopefully, having planned ahead, you're in a much better position.
Lisa, do you have anything to add here?
I do. It's making sure that you know where everything is. Yeah. So having a folder that lists all your accounts, who the managers are, who you deal with, telephone numbers, it's very practical stuff. And it's not only that sort of stuff which can make things so much easier, it's knowing how to pay the electricity bill, the gas bill, those sorts of things, those practical things, having that written down and in a place. I think somebody of any age should do that, and it just gives you so much more knowledge. And as we've been saying, that knowledge is power, and it puts you in a much stronger position, and you'll feel more confident as well, I hope.
And of course, it's important to review any legal documents, especially things like wills. They may need updating after the death.
So make sure you know where the will is, or any legal documents. Have literally a box with all this stuff in, and you know where it is.
Yeah.
Another important document is power of attorney. What do we need to be knowing about that from a financial perspective?
There are two sorts, but essentially what you're doing is you're giving somebody else the power to sort out your affairs. And the two sorts are sort of finance, to do with money, and the other one is sort of health and welfare. So care and plans and things like that. Really useful documents. They're there to make sure that someone you trust can look after you when you can't look after yourself. Sometimes people do that when it's just too much. They're perfectly intelligent and capable, but they just want someone else to help them. And those are really useful. But there may come a point where you actually don't have capacity anymore, and that's when they are really critical. It's very difficult for me, for instance, to help someone if they don't have capacity dealing with their children, but their children don't have power of attorney. I'm very sympathetic. I'll do what I can, but I'm limited without that document.
And the biggest gift that somebody can give is to be able to have clarity with that documentation before those kinds of events, right?
Absolutely. If that document exists, then I'd recommend that you do give it to, for example, your investment provider, so that if that day comes when you do lose capacity, that can come into place straight away. They've got the documentation ready to go and someone else can act on your behalf. It just means that there's no unnecessary delays.
Moving on here with this life stages graph, what are some considerations that need to be kept in mind as you age?
Not everybody needs care, or needs to pay for care, but it's something that you need to plan for, so that you've got the money there if you need it, so that you have the freedom to be cared for where you want to be cared for, in the way you want to be cared for. But not everybody needs that. I think also often when I'm talking to older people, there's a degree of anxiety about spending money.
Totally. Because it is very expensive,
Yeah.
right?
So once you've set aside money for care, and it is a lot of money,
Yeah.
it really is a lot of money. But someone's going to spend your money somehow. You need to spend it on care, sure. Or your heirs, your children will spend that money, or your spouse will spend that money, or you could spend that money on having a good life and doing what you want to do. So don't be, you're saving money for a rainy day perhaps, or whatever. Well, once that's sorted, don't worry about spending, because this is where you are in life.
This is what you need it for, right? This is what the money is for, right?
Yeah, it's for you to be spent how you want it to be spent.
And a really important part of the planning aspect, which a financial advisor would do, would be develop that comprehensive plan. So with their cash flow planning software, they can build in expectations of your life expectancy, for example, inflation, and also estimate what those costs are going to be. And so it can be really beneficial to plan ahead and get that planning done early.
Tons of information to be taking in here, ladies. What should people be doing now, Lisa?
There's sort of three big things. Rebecca and I have been talking a lot about communication.
Yeah.
And I think knowing and sharing and agreeing things, that's with a partner, is really important. I also think it's important to engage with this stuff. Don't be scared of it. Just look at it.
Knowledge is power. Knowledge is power.
So that you are in a better financial position. Own that, and I think that's great. And the last thing is to get more informed. We've got tons of stuff on our website. There's your investment journey, Erica. But also me and my team, we speak to people all the time, and we're happy to have a short conversation with people. If we can sort you out in a short 15-minute conversation, happy to do that. If we need to point you in the right direction after that, we'll do that too. Just do that. I just want women, to feel more confident moving into the space, and if I can help them do that, that's a good thing.
And I do have to say, I think the power of representation is so important here. So I think that having both of you as finance professionals talking so eloquently and so competently about so many of these things, I know has made me learn so much. I hope that people at home have learned so much. What else do you think can be done here?
I think for women, it's obviously more than just painting the website pink.
Yes.
It's about changing the way you speak to people.
Yeah.
So that it doesn't feel like jargon, it doesn't feel foreign. And I think by we are taking steps to improve the way we communicate and the words that we use on our website and in our documents. And in making it better for women, we make it better for everybody, is what I think. And making it easy to talk to people as well helps.
Lisa, Rebecca, thank you both so much for all of that information here today. And thank you to each and every one of you for tuning in to this International Women's Day webinar. We hope that you learned something. We hope that your questions were answered. We hope to see you at events in the future. Bye-bye.